Thinking about taking an education loan, but not sure where to even begin. Indian banks and NBFCs are always the primary options. But did you know there's an international lender? Many of you do know about the Indian banks, private banks, and NBFCs, but considering an international lender is always last on the list. But do you know that international loans have a financing option where they don't even ask for collateral or a cosigner? Prodigy Finance is among the popular lenders and providing funding to the students who don't have their own funds. This video will convince you that Prodigy Finance can be a smart funding choice. After watching this video, you will understand how it works, what it offers, and how can you get a loan without moving your one foot. What is Prodigy Finance? Prodigy Finance is a UK-based fintech company that offers student loans to international postgraduate students. Founded in 2007, it has helped over 43,000 students from 150 countries, disbursing around $2.3 million. Recently, they have secured $310 million in funding from the US International Development Finance Corporation, reinforcing their mission of inclusive access to quality global education. What are their offerings? Prodigy Finance offers two types of loans. First, no cosigner and no collateral loans. It is designed for students who want independence. No, not that independence. I meant financial independence, where you don't have to rely on co-applicant and want to sponsor your education. The interest rates of this loan type starts at 10.35% and are determined based on your university program and destination country. The approval and the repayment terms are decided based on your future earning potential, not your and your family's financial background. Still, you can avail the full moratorium option. But in the second loan type, the name itself suggests a co-signer education loan. This means you need a co-applicant, just like Drake. He has his father as a co-applicant. In this loan type, you get a reduced interest rate starting at 8.35%. Co-applicant is an added security that helps in reducing risk, hence the lower rate. But this loan type comes with a term that states the co-applicant is required to pay a $100 payment every month for 30 months, which includes your moratorium period. In both loan types, they charge 4% of the loan amount as a processing fee, which gets included in the principal amount. Hence, you don't need to make any upfront payment. So, we know almost everything about Prodigy Finance. What's next? It's time to apply for the loan. The Prodigy Finance application process is online. However, your steps might differ based on your loan type. For instance, Drake chose the co-signer education loan because his father can afford the $100 payment every month for the next 30 months. So he just visited the website, registered an account and filled in the basic information. After getting the provisional offer with the 14-day validity, co-applicant documents are to be uploaded on the dashboard. After verification, your co-applicant needs to acknowledge the terms and conditions. When both the applicant and the co-applicant accept the terms and conditions, a payment of $500 is to be made to get the sanction letter. Do you know? You need this sanction letter during your visa application as the proof of funds. After you get a sanction letter and reach your dream university and sign the loan agreement, the amount will be disbursed when you join the university. But Raj didn't have a co-applicant, so he went for the no cosigner, no collateral loan. In this application process, you first need to register on the Prodigy Finance website and fill in all the details. Upload all the required documents and it was successful. Get a provisional offer within 14 days validity. When you acknowledge the offer and provide the requested documents, pay the fee of $500 to get a sanction letter. When you receive the sanction letter, your visa application will get approved and you will reach your dream university. There you need to sign the loan agreement to get the amount disbursed to your university account. Now, there's a lot of information in a few minutes. To make it more precise, here is a quick recap to make things easier. In the no cosigner loan, you don't need anyone to back you up. Everything depends on your course, your university, and your future earning potential. But in a co-signer loan, you don't need a co-applicant and their income and financial background influence your interest rate and loan amount. Interest rates of the no co-signer loan start from around 10.35%, while the co-signer loan starts from 8.35%. Repayment plans during the moratorium period can be customized for both loan types. But for a co-signer loan, a $100 payment every month during the moratorium period is mandatory. Approval timelines. The no co-signer loan usually moves faster since there's less documentation. But with a co-signer involved, it might take an extra couple days because they also need to verify the co-applicant's details. Oh, and regardless of which loan you pick, payment of $500 is mandatory to get a sanction letter, and a processing fee of 4% is added to the loan amount. Am I able to convince you regarding the international lenders? If yes, don't forget to hit the like, share and subscribe buttons, and if not, then just hit the check your eligibility link in the description. Our personalized education counselors might be able to help you better. Meet you in the next video where we are going to talk about higher education in India and abroad. So bye bye and have a good day.